It's the last one for the week. Good morning and welcome to Business Morning. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. We kick off this one with the global oil market scene as oil prices dropped again this morning, retreating further for 11-month highs hit last week, weighed down by worries that the new pandemic restrictions in China will curb fuel demand in the world's biggest oil importer. U.S. West Texas Intermediate crude futures dropped 53 cents to $52.60 a barrel after slipping 18 cents on Thursday. Brent crude futures fell 45 cents to $55.65 a barrel, raising a 2-cent gain on Thursday. Recovering fuel demand in China underpinned market gains last year, while the United States and Europe lagged. But that source of support is fading as a fresh wave of COVID-19 cases has sparked new restrictions to contain the spread. The commercial hub of Shanghai reported its first locally transmitted cases in 2 months on Thursday, and Beijing is urging people not to travel during the upcoming Lunar New Year holiday, when tens of millions of urban workers typically head back to their villages. The market is awaiting official oil inventory data from U.S. Energy Information Administration today. And after industry data on Wednesday showed a surprise 2.6 million barrel increase in U.S. crude inventories last week, compared with analyst forecasts for a 1.2 million barrel draw.
And back here, oil and gas experts, regulators and service providers yesterday converged on Lagos for a strategic industry initiative aimed at improving safety, value addition and cost efficiency management. Now, the event was the unveiling of the Nigerian National Oil and Gas Excellence Center and was launched virtually by Nigeria's President Muhammadu Buhari.
Reacting very early in the year to prevailing global situation which is taking a toll on national economies, the federal government of Nigeria is rallying to hedge a critical sector of the economy, the oil and gas. That response has bettered the National Oil and Gas Excellence Center here in Lagos, housed in this building. And the very essence why everyone in this room and those joining virtually are gathered to hear what exactly this is about and what it's meant to achieve.
The Nigerian Oil and Gas Excellence Center encompasses industry-focused program that will drive strategic mediation in operation, skills and competence development, use of big data, Internet of Things, and artificial intelligence for decision-making, deployment of proven technology for secondary and tertiary oil recovery, as well as coordinated response for emergency.
Next, to shed more light from the policy standpoint of view is the Minister of State for Petroleum.
NOGEC has been carefully designed to support the achievement of the ministerial priorities, significant amongst which are cost reduction, increase in production, and value optimization in the industry.
Once again, as he has done very recently, the President is joining remotely to endorse this initiative and launch it.
For the benefit of the oil industry and Nigerians in general, to the glory of God.
This center opens a new set of opportunities for the Nigerian petroleum industry in terms of investments, cost reduction, safety in operations, and capacity development. The establishment of the National Oil and Gas Excellence Center aligns with our administration's commitment to foster stability, growth, and sustainability of the Nigerian oil and gas industry, consistent with the economic development.
Housed in this resource center is the Search, Rescue and Surveillance Command and Control Center, National Improved Oil Recovery, Oil and Gas Alternative Dispute Resolution, Oil and Gas Competence Development Center, and Integrated Data Mining and Analytical Center, all geared towards safety, value and cost efficiency. Olu Phillips, Channels Television News.
In the meantime, it's still a tug of war to obtain the national identity number, even with the booking system introduced by the National Identity Management Commission to decongest enrollment centers. This did not deter the usual crowd from turning up at the centers. At the Alausa office of the Commission in Lagos, the enrollees complain about the cumbersome nature of the process.
Come early, book ahead, and wait to be called in. Will they be called in before the deadline? And the fear of being deactivated from the network has kept many here pushing their luck. The scuffle on the queue, a regular game of fitness, at least for everyone who wants to stay in line. There are those who would rather sit out, waiting for the less chaotic option. Scenes of disagreement here and there, and the argument is largely about the process and the question of transparency.
We knew what happened last week, even on Monday, Tuesday as well. So this is what we find ourselves here. And on a daily basis, it appears that we are being brutalized, we are being embarrassed at the estate of this COVID-19 widespread disease.
You can't say because, see, the project
Bile Somi Adesina has been coming here, not for registration, he says. Misinformation is one of the problems, and enrollees need to do better.
Less than 1 hour ago, I've been in. They allowed me to get in. I've seen some about 1 to 200. These people have attended to. And they even gave them some afternoon section. Afternoon section that they had some people to come back around 2 p.m.
The deadline for registration is February the 9th, but here in Alausa, enrollees are getting a date in March to get registered.
Just asked me to write my name, then I wrote my name down, and they collected the number, the names. So after the name, I asked them that, which day can I come? They said March 4.
The new guidelines, which took effect since December 2020, is expected to contain the spread of COVID-19. The large gathering here, however, does not suggest the approach is yielding the desired results. Dari Idu, Channels Television News.
And the issue of registration of the NIN is not only a concern for Nigerians here in the country. Nigerians abroad are also concerned. The chairman of Nigerians in Diaspora Commission, Abike Dabri Erewa, had advised Nigerians abroad to visit the website of the National Identity Management Commission to enable them register for the national identity number. She said that the details of the agents who are accredited to register Nigerians for NIN can be found on the website. So we thought it would be nice to know how it's playing out with some Nigerians in diaspora. Dr. Austin Okigbo, Professor of African Studies at the University of Colorado, Boulder, joins us next. No, sorry, actually joins us now.
Good morning, Dr. Okigbo. Thank you very much for joining us on the program.
Thank you. Good morning.
Well, I know it's very early for you there now, but thank you for keeping awake just to talk to us. Now, you have been following events here in Nigeria, and you are aware of the directive that all Nigerians must have a national identity number, which has to be linked to your SIM card, or you stand a chance to be disconnected by your network provider. What is your take on this?
Well, thank you, Chimezie. First of all, it's a welcome development, because in this kind of program helps to accomplish a lot of things for any country. Having national identification number and national ID, what we call the multi-purpose card. For security reasons and for many other reasons that I won't just get into right now. Well, the only challenge is the question of whether the goal, the aim, is being accomplished and within the limited time frame that is being provided, as well as the knowledge dissemination within the diaspora.
Abroad have been asked to visit the website of the NIMC to enable them register for the national identity number. And the details of the agents who are accredited to register them for NIN can be found on the website. Are you aware of this, and what has been your experience?
Yeah, I'm aware of it, but I must say we have to remember one thing. If you are a citizen of a country living outside of the shores of your home nation, your point of contact between you and your home country is the missions, the foreign missions, the embassies and the consulates. Right now, if you go to the websites of the embassies and the consulates that we have, for instance, here in the United States, we have one embassy in the Washington D.C., a consulate in New York, and another in Atlanta. None of those websites have this information. So the commission is based in Nigeria. There doesn't seem to be a coordination between the commission and the Nigerian foreign mission. So to announce in Nigeria back home that people in the diaspora, this is what you're supposed to do. How do you reach the people in the diaspora? Nobody gets that information. The easiest access, the easiest place for us to get the information is through the Nigerian foreign missions here in the diaspora, not from the offices back home. So it's posing a little bit of a challenge. I bet you not many people are even aware of that announcement.
Okay, for you, that you are aware, have you even tried to visit that website to see how it works and to see the possibility of probably getting your NIN from there?
Yes, I have. And as a matter of fact, the interesting is there's a little bit of a confusion. If you go to the commission's website, you'll find links that don't necessarily correspond to the more exhaustive link that you have from the commission that you have in the Diaspora Commission. Has a lot more links than the National Identification Number, office or commission back home. However, in all of them, there are a total of about 23 or 24 organizations or agencies or agents working on behalf of the names, and they are established in Chicago, several of them in Atlanta, operating in New York, Washington, D.C., Houston, and Dallas. But the problem is a lot of them are not active. Right now, from the Diaspora Commission's website, there is only probably one, the knowledge base, that is still operational. But even then, when you click on those, the steps, the guidelines, the step-by-step, about 16-step measure that you have to take to complete the process, it's not that way. It's not working that way through the website of some of these organizations, these agencies. The implication is, even if you were here and you want to follow that process, it's still confusing. It's not straightforward.
Okay, based on what you've seen on the website, how much on the average would it cost a Nigerian citizen like you living in the United States to obtain the NIN?
Most of them will say $50. That's what it costs for the diaspora. Okay. But if you do the premium, which means when the agency have to carry their work facility to come closer to you, that means out of sight operation, then that's $70. But then if you have to do it yourself, remember, official fee is $50. But then think about it. I live in Denver. If I have to fly to Washington, D.C., book appointment, I have to check into a hotel, just like getting your passport. There are a lot of Nigerians living in the United States. For them to get this process completed, you're looking at an average of $500 to $1,000 to complete the process, in addition to the official fee.
So are there better ways you think the Nigerian government can actually go about this? What is bothering me is, why do we have to replicate and reinvent the process? We already have the embassies that are issuing passports and the consulates, the missions that are issuing passports. We do biometrics capturing.
in these places to obtain your passport. Why do we have to go through these private organizations? Their websites, some of them, their websites are not even well set up. I would have expected the government to place this under the foreign mission so they can handle it. They are already trained. They already have the trained personnel who know how to handle biometrics, who know how to process passports and documents of this nature. It just doesn't make sense that we have so many listed. There are more than 25 companies that are operating, and it's very confusing. And none of the steps on each and every one of them, when you go on their website, is not consistent, even with the guidelines that have been set up by the commission.
Well, as it looks now, we seem to be doing a lot of registrations in the country. We've had the SIM card registration, BVN, etc. How can these be aligned?
How it can be aligned is up to those who understand the digital economy and the digital sector. I'm not an expert on that.
Yeah.
But what I think is that there's so much reinvention of things. And I know that national ID number and national ID card is a totally different thing compared to BVN. But why can't we use the facilities we have already? That's the most important question, because right now there's too much reinvention of the infrastructure, and is making it much more difficult, not only for people here, but I was watching a moment ago as you are reporting what is happening there in Nigeria. That's part of the reason why there's so much confusion.
Now, how do you people in diaspora, I'm sure you have a kind of an association or something, how do you interface with the Nigerians in Diaspora Commission? What's the interface like?
That's a very interesting question. Remember, Chimezie, that the first time Nigeria set up an office for diaspora relationship was in 2003 under President Olusegun Obasanjo. And then there was a parliamentary committee that was set up in the National Assembly. By creating this Diaspora Commission, again, it's just, like what I'm talking about, reinventing the wheel. Why not revamp the organizations, the structure that we have already in place? The problem now is that Dabiri is, has good words and good language. Last year, they did the investment summit. The problem is there are many cultural organizations of Nigerian cultural organizations that exist here in the United States. And a lot of these cultural organizations are not even aware about what is going on. We have academic organizations like the African Studies, the Nigerian Studies Association, and nobody is making effort to communicate with us. Part of the reason is because the channel that we've always maintained, I'm, for instance, as a person who is in the academy, I'm much more inclined to reach out to the embassy and the missions. For instance, when I have to do security analysis, I don't have anything to do with this Diaspora Commission. They don't even know what I do. The only people I interact will be with the military attaché at the embassies and the consulates, the economic affairs, and including when I have to prepare reports, either for institutional purposes or on behalf of the Nigerian government, for the US government, or for reporting back to the Nigerian government. I don't have anything to do with the Diaspora Commission. They don't know what I do. So there is a disconnect right now between the Diaspora Commission and the foreign missions established here. And that has serious implication in terms of coordinating and synergizing the work that we do.
Now, a quick one before I let you go. Is there something for you think the Nigerian government needs to change? I mean, some of the challenges Nigerian in diaspora, aside from the challenge of this NIN now, that you think it's critical for the government to really address?
Honestly, the way other countries do it, like the United States, UK, and European countries, is that when they want to interface with the diaspora, they use their embassies. So I think the best thing the Nigerian government can do is to reharmonize already the structures that are in place, including the ones that started since 2003, and then establish an Office of Diaspora Relations. We already have Office of Citizenship at the embassy and the consulates. So if you want to create a subsidiary office that is more invested towards other diaspora interests, that's the best way to do it. Right now, Dabiri may be doing a good job, but she's operating from Nigeria. You can't do a strong kick from afar. That's not effective.
Okay. Thank you very much, Dr. Okibo, for sharing your thoughts there. And once again, we appreciate your time, keeping awake to talk to us. So you can go back to sleep now and be safe and be well.
Thank you very much, Chimazie and Co. Have a nice evening.
Thank you.
Thank you. Now, at the primary auction on Wednesday, the DMO offered instruments worth about 150 billion naira to investors through 3 reopenings. These and other issues in the fixed income market will form our conversation as the head of research at Greenwich Merchant Bank, Ayodeji Ebo, joins us next.
And Ayodeji Ebo joins us now, head of research, Greenwich Merchant Bank. Hello, Ayodeji. Thank you for joining us.
Yeah, thanks for having me. Good morning.
Good morning. So we saw a yield spike at the fixed income market yesterday, despite the high unsuccessful bids at the primary market bond auction on Wednesday. Why did the market react that way?
Okay, I think even before the auction, we've seen for most of the traders and the portfolio managers, they are all very skeptical as relating to the direction of the market. And after the bond auction, we had expected that there will be some form of that will provide some form of direction for the market. We saw that there were even unsuccessful bids. I think out of 150 billion that was offered, the DMO offered significantly lower than that. So we feel that what we saw yesterday was still a lot of the traders were still holding back, trying to see the direction. So what we actually have now in the fixed income market, what I call in code, artificial demand, because when you look at most times, even when you want to buy, those instruments may not be available, but you always see quotes. Most of the investors are trying to protect their hand. We believe that by next week or before after the MPC meeting, there will also be more clarity, and we should see more activity in the fixed income market.
Now, yields in the fixed income market has remained low in the past year. How do you think this will impact on the return on the pension funds administrators?
Yes, currently I really don't envy the portfolio managers. If you look at the returns based on the low yield environment, if you look at the portfolio structure, about over 80% of the total funds is invested in government securities. And now you can see with the low yield environment, it's expected that the return would be lower. Even looking at the investment in fixed income securities, we've seen that reduction in investment in short-term securities from a proportion in treasury bills last year, January, was as high as 20% allocation to T-bills. But we all understand because of the segmentation of the T-bills market. So we expect that over 30% investment in, when you look at investment in placement, investment in short-term securities, the reinvestment risk for these funds and some of the new inflows will impact on the overall return of the fund. And as a result, it's not also positive for the contributors, because based on the expected return they would have targeted on retirement, that may also be impacted because of this return. So what we feel that may also happen is, we've seen that shift. When we look at the allocation to equities, from a low of 4.3% in March last year, it increased around 6.4% as at November. So that would also help the return because we know some of the stocks that have been, most of the fund managers also purchase have high dividend yield, which also helps stabilize the return on overall fund.
Okay, looking at the banking sector now, how do you think banks will react to this, and how will it affect their profitability in 2021?
Okay, interesting. If you look at the books of the bank, so out of the total assets, investment securities account for around 30% of their total assets. Loan always form the major part of the total asset. And we believe when you also break that down further, you would discover that over 80% of that will mature within a year. So most of the bank play short. They don't invest much in bonds. So that investment risk is expected to set in. So what we feel that most banks would have to do now would be that for them to increase their lending to bridge that gap. If you analyze the third quarter result, you will discover that interest income of most of the banks have also been shrinking when you look at it on a year-on-year basis. And banks are focused on either increasing their non-interest income. From what we saw in the quarter result, you discover that capital gains or trading gains from fixed income securities, as well as exchange rate gains, help boosted their position. But now going into 2021, yields already low. So that capital gain that helped in 2020 will not be there. So you feel if the banks would have to either, there's a limit to which they can reduce their cost of funds, which is almost zero now. And the only option they have now is to increase interest on to increase the lending to cover up for that gap. So it's really going to be a tough time for the banks, and we can see one of the reasons why banks are also changing their business structure by opting for the holding structure license that would enable them have other business subsidiaries that can also support their income. But by and large, we would also expect that the operating expense of most of the banks will work on that to be able to boost their profitability.
Now, with the significant amount the government intends to raise in the domestic market in 2021 to bridge the budget deficit, how will this impact on yield in this year?
Yeah, thanks for that question. If you look at, based on the budget or the approved budget, about 4.6 trillion is expected to be raised domestically. But if you also compare that, just suppose that with the expected maturity, is over 8 trillion that would mature this year. That includes OMO. So when we look at the available liquidity, we don't expect much impact on yield, except the CBN decides to review its policy around the fixed income market to raise rates so that especially within the treasury bill market, or using the special bills. Now that CBN has another bill that domestic investors can purchase, they can use that special bills to raise the rate. But beyond that, we feel that when you look at last auction, the DMO was also mindful of the rate that they also borrow. Because when you look at last year, you can say the government saved a lot by borrowing at single-digit rate or almost near zero rate, which will also help amidst the debt sustainability concerns that we have.
Okay, still on the low yield environment, how has this benefited or will benefit the corporates?
Yes, looking at the statistics for last year, we discovered that corporates were able to raise about 300 billion in form of commercial paper and corporate bonds, which we feel is also positive for the sector, the private sector. So if the yield environment remain this low, we feel that we would see more of the corporate tapping into this space. We've seen a lot of even the state government last year also trying to also raise funds from the market at. So we believe that it's going to be positive in the short to medium term for the corporate because it would impact on their finance costs. We saw this thing of flour mill. Flour mills flour mill was able to raise 30 billion at I think around 7%, which is very considerate. So we believe that most of the firms would also follow that path, and will be able to bring down their finance costs, also refinance very expensive loans that they can.
Now, the Monetary Policy Committee will be having its first meeting for the year next week, Monday and Tuesday precisely. What are your expectations?
Okay, thanks. I feel that the first meeting of the year, we don't expect any major tweak, that the CBN will still want to give more room for the rate cuts that happened at the second to the last meeting of the year, that's in 2020, to see how that has impacted the economy. Also, looking at what has happened between the last meeting and now, we'll discover that because of the shock of the second wave of the COVID-19 pandemic, we've not the economy is still struggling to balance. Yes, it's positive that we've seen oil prices increase, which is positive for us. But we feel the focus of this meeting would be how how the CBN can also persuade the banks to also increase their lending to the real sector, which would be one of their focus. Also, exchange rates, which is always the elephant in the room, would be another major focus for them, to see how we can bridge the gap between the unofficial market and the official market. Because as long as that gap remains, there will be a lot of ramping that get, and also in the investors and exporters window, the CBN has been the sole supplier of FX with that space. So we feel that those are some of the major engagements that the MPC members would discuss and see whether the way out, because we also need foreign portfolio investors in the to support the flow of dollars to the country.
All right, Ayodeji Ebo, thank you so much for your time.
Thank you for having me.
Thank you. So now let's look at what's happening in the equities market. Edidiong.
Good morning, Ladi. Well,
morning.
We saw profit takers in the market yesterday, so I think now we just say, buy, sell off thing happening in the market. But the all-share index was down 0.12% at 41,099.15 points. Now, we saw the month-to-date and the year-to-date returns reduced about 2.06%. Equity cap was at 21.499 trillion naira. However, we saw a huge turnover of volume and value yesterday. We saw 1.12 billion shares worth 6.39 billion naira traded in 7,404 deals. But to get more sense or more clarity as to what happened in the market now is Mohammed Kaide, the head of securities dealing at APT Securities and Funds. Good morning, Mr. Kaide. Thank you for joining us on the program.
Good morning. It's a pleasure to be there with you.
Now, we saw unusually high volume and value of deals traded yesterday. What was responsible for that?
Yes, yesterday was a day that Transcorp did close to 400 million units of shares. And this has contributed to the volume that was traded in the market on that yesterday. The news around Transcorp that made the Transcorp to be gaining momentum these days is still there, but the profit takers has to take the advantage and make sure that they took the advantage at the market and they quickly supplied the market. And that is why they will see that kind of volume that we experienced yesterday. And the market and the Transcorp traded around 100 million units there yesterday.
As the full earnings season, is fast approaching, what should we be expecting, and, how should we be seeing investors? Okay, I think we've lost Mr. Kayode there. Well, for the volume and value yesterday, we saw GT Bank accounting for over 2 billion units. So there was a lot of, trades on GT Bank. Hopefully, if we get Mr. Kayode back, he'll be able to answer what really happened on that particular stock. Now, sectoral performance was mixed yesterday. The banking sector was down 0.23%. Now, we only saw gains from Zenith Bank and Sterling Bank. All the other sectors declined on that counter. Consumer goods was down 0.30%. That was due to losses from Cadbury, from Guinness, from flour mills, and from Dangote Sugar. Industrial goods was up 0.27%. However, that was largely driven by gains from WAPCO. Dangote Cement declined yesterday, although marginally, so that offsets gains on that sector. Insurance was down 6.70%. Now, we've been seeing a lot of activity in the insurance sector. So I think what just happened yesterday was investors booking profit, and, cashing out some of the gains that they had. But here, Mr. Kayode is back with us on the program. Mr. Kayode, I was asking you before the line went off, as the full year earnings season is approaching, what should we be expecting?
We should expect a situation whereby most of those companies will replicate exactly what they did in 2019. So the earnings and also dividend being declared is likely to replicate what they did in 2019. Though during the pandemic, we were thinking that the earnings are going to be seriously affected. But for the fact that most of these companies were able to keep their expenditure lower than what it used to be. So the bottom line is being enhanced with this particular act, and currently we are expecting that they are going to declare almost the same thing that was declared in 2019. So the only thing I believe is going to be the same as what we have in 2019. As for the fact that all the quarterly report has been released is cheating to that direction. So we should expect them to declare the same thing they declared in 2019.
Let's just focus on some companies now. Yesterday, GT Bank contributed, over 2 billion naira to the total value. Is there anything happening on GT Bank that we should know about?
Currently, it is not. There is no information known to the market as it is today. But what I know is that whenever we are moving to the anything, this institutional investor and also foreign investor also always move towards this kind of stock, especially GT. GT is a stock that is a toast of foreign guys, and I'm expecting that this is the reason that they used to move towards this stock. So the stock is expected to have such a rush for now. Bearing it in mind that they've also give a notice for close period. So we are expecting their result any moment from now. So when the result comes out, you see more investors investing more in the stock.
All right, Mr. Kayode, thank you for your input on the program. Have a lovely weekend.
Thank you very much.
Mohammed Kayode is the head securities dealing at APT Securities and Funds. Well, Chimi and Ladi, we heard all Mr. Kayode has to say about the market. So let's just keep our fingers crossed and see how trading plays out today. Hopefully, some people will want to take advantage of the lower shares yesterday.
Exactly. Nothing wrong with profit taking, I guess. Anyway, thanks for the update, Eddie. We'll take another quick break, and when we come back, we do an opening call to London.
For UK retail data is one data market is looking out for today. But let's see how the day has started already in London. Good morning, Juliana. Well, while we await the retail data today, there are indications UK retailers could abandoned goods EU customers want to return, with some even thinking of burning them because it's cheaper than bringing them home. It looks like Brexit is going to take a toll on retailers.
Not just Brexit. Good morning, by the way, Chimaze. We actually have the data. We've got the retail sales data, but before that, I'm going to quickly update you with the PMI flash data. This PMI data, very, very important because, of course, economists, Bank of England are all suggesting that we are heading into a double-dip recession, and it appears to be that way. It does show that PMI has fallen to 40.6 here in the UK. Now, that's an 8-month low, and especially if you consider that the PMI has a look at how the private sector is doing. So this is giving us an update on how things have been going in January, and it's not very good. Both manufacturing and production have managed to stay above 50, so above that threshold. But the UK is a service-based economy. More than 80% of our GDP relies on services. We know now we're deep in the middle of a third national lockdown. Boris Johnson, the Prime Minister, signalling that this lockdown could indeed last until the summer. The services has come in at 38.8. Now, that's just come in a couple of minutes ago. So, of course, economists are going to be chewing on that, but not great for Boris Johnson's Conservative government. Also, as well, the retail sales data, which came in about an hour ago, not great. The retail sales did stage a tentative recovery in the month of December, climbing to 0.3%. This is after a 4.1% fall in November. In November, again, we were in a second lockdown. A lot of economists had pegged that the retail sales may come in slightly higher at about 1.3%. And that's because, of course, in December, that is the golden month. That's the time where people are buying for their loved ones. But the 0.3% is just not good enough. Of course, online players are benefiting over the past year because the Office for National Statistics data does actually give us a yearly view. It does show that retail sales online have increased by 32%, which is good. Food shops, they've also recovered, and they have shown a staggering increase of 79.3%. So you can probably see that on my cheeks and on my waistline. But annually, clothing sales have fallen by a quarter. So it's not great. We are coming to the end of January. There is a slew of data that's come out today. Next week, of course, lots of people are looking at that unemployment data, currently standing at 4.9%. If that rises, we could see an increasing fall in consumer confidence here in the UK.
Well, still on the retail market, Next has pulled out of the race to acquire Topshop. Any idea why Next had to pull back from this deal?
Well, yeah, Next, they are a pretty decent store here in Britain. They are one of just a few stores that have managed to weather this pandemic storm. They've actually shown that they've increased in their sales over the past couple of months. They released a short statement basically saying that they were unable to meet the price expectations of the vendor. Our viewers will remember Arcadia Group are really stalwart in the retail sector here in Britain. They own stores such as Topshop, Topman, Dorothy Perkins, Burton. They went under in November. Deloitte are looking after who is going to buy some bits and pieces of Arcadia. We're expecting that it will be chopped up into pieces, but Next have pulled out. There are still many others who want to purchase parts of the group. Mike Ashley's Fraser Group is just one of them, although Sir Philip Green and Mike Ashley are billionaire CEOs that have got a little bit of a rivalry, and I don't think he wants his pits to touch that. And then there's JD Sports and retailers ASOS and Boohoo. The retail sector are really hoping that the Arcadia Group will survive in some shape or form, purely because it's such an iconic name. 180,000 retail jobs went under here in the UK last year. The fact that the Arcadia Group could be collapsing will take with it 18,000 jobs. But even though Next have pulled out, like I said, there are still many other contenders that are on the table.
And just as you said, lots and lots of data today, this morning in particular. And yes, we have the data showing the UK government borrowing hitting £34.1 billion last month. That's the highest December figure on record. I know the data just came out, but how much details do you have?
But it's not great. We're expecting a budget by Chancellor Rishi Sunak on the 3rd of March. This is a delayed budget. We were supposed to be getting a budget in August. And again, you know, this borrowing data just goes to show how much COVID-19 is gripping the British economy. So we know that £34.1 billion was borrowed last month. Much of this money was going to the government's furlough scheme. They are paying 80% of people's wages. The British government are paying people to stay at home. That is expected to last until April, though there are some suggestions that the Chancellor is going to extend that. Last year, the British government borrowed £393.5 billion. That is almost 95% more than what they borrowed in 2019. Now, what the economists are saying is that, you know, there's no chance that Chancellor Rishi Sunak can start raising taxes in the March budget. Already, there is a public sector pay freeze. There are suggestions that capital tax could be rising, but people were still, worried about their jobs. We had that pretty alarming announcement from the Prime Minister yesterday, suggesting that lockdown could last until summer. That had people screaming at the back of their chairs, and lots of Conservative backbenchers perhaps will be staging a revolt. They want to know the figures and the data suggesting why Britain can't come out of this. But yeah, you know, we're in a little bit of a frenzy at the moment, and the economy is taking an absolute battering. But because people aren't working, because people are dying in record numbers, the economists are urging the government not to consider rising taxes at the back of these pretty monumental borrowing records, Chimezie.
Well, quite a flurry of data for the market to chew today. So we'll get an update on how the markets are reading these numbers later when I talk to you on our afternoon show.
Thank you.
And back here, let's see what's happening at the debt and currency market with Eddie. Back to you, Eddie.
Thank you, Chimi. Well, the fixed income market was mostly bearish yesterday. By bearish, I mean we saw yields increase both at the bonds and the Nigerian Treasury bills market. But let's talk to Ifeoma Onyejekwe, a fixed income trader at UBA. Good morning, Ifeoma. Thank you for joining us on the program.
Good morning, Eddie. Thank you for having me.
Well, if you can hear me, there was CBN debit from the weekly OMO auction. What's our rates like now, and what's the activity like now?
Well, the market is pretty quiet now because we're expecting a CRR debit auction from the CBN. Well, actually, yesterday's OMO auction, rates were maintained on all tenant offers at 1.51, 474, 434, and 574 for the short, medium, and long tenor bills. So right now, everyone is in a limbo as they are expecting a CRR debit. So market is watchful as to what CBN's moves will be.
Yeah, no. Well, we saw yields increase at the bond and the Treasury bills market yesterday. What was responsible for that?
Oh yes, as we know, there was a bond auction on Wednesday, and we saw yields rise up to 874 and 895. So market players, not just yesterday, from the beginning of this week, we've been seeing bearish reactions because people are trying to sell off their old stock and then replenish higher at a new stock. And in the Treasury bills auction, the activity has mostly been on the NT bill side. The OMO side has pretty been quiet. So the bearish reactions seen on the NT bill side has mostly been retail investors who are letting go of their old deals to reinvest in other assets such as equities.
All right, Ifeoma, thank you for your input on the program. Have a lovely weekend. Ifeoma Onyejekwe is a fixed income dealer at UBA. Well, Chimi and Ladi, we heard what Ifeoma said. We just hope for a positive trading week at the end of the week.
Well, it's the last trading day, before the MPC. So we'll see how that plays out. And I'm sure traders, of course, are looking forward to hearing from the committee next week, Tuesday, precisely. And Aladi, what's happening in the cryptocurrency market?
Bitcoin still down And
this morning I saw
too.
below 30
yeah,
already.
It went below 30, you know, touched 28,000, but bounced back to about 31. So it's just ranging, you know, between 28
It actually
and
went
31.
as low as 28.
Yeah.
And what about the altcoin?
But the thing is, at the end of the day, we know where it's coming from.
Okay, thank you very much. Continue to keep an eye on that market.
No problem.
Well, that's it on the program for today and, of course, for the week. Thank you for watching. I'm Chimeze Obi Iwagu.
Thank you for watching. I'm Ladi Williams. Bye for now.